Hello traders, Gary Wagner here just after 11:30 in Honolulu, 5:30 in New York. It is Tuesday, 26th day of June, 2018, and this is the daily report for gold and silver, a continuation of lower pricing in the precious metals, with gold trading lower by about $8.10, closing at $12.6080, a 3-cent decline in silver at $16.29, and that is with the headwinds of a stronger US dollar, up 42 points at 94.36. A tepid recovery in the Dow, up 30 points at 24,283, and Bitcoin is trying to find some footing just above 6,000 at 61.60. Gold pricing continues to track lower, currently down $8.50, with August futures currently fixed at $1,260.40. What is noteworthy about today's decline on a technical basis is the fact that the market opened just at $1267.20, which is the 78% retracement. It's a retracement of the major rally, the only major rally that has occurred this year, and in fact has tracked lower throughout the day, actually hitting a low of $1256 before recovering slightly off of those lows. Today's price break below the 78% retracement at $1267, coupled with the identification of a death cross which completed its pattern in trading yesterday, are an indication that the correction that has been evident in gold ever since hitting these tops at 1370 and trading lower could now have morphed into much more than a simple correction. At the end of 2015, beginning of 2016, gold prices had come off of a multi-year correction, which of course began as prices hit 1900 and traded lower. The first thing that we saw was a dramatic rally off of these lows, in which the market went as high as about 1370, a price point that to this day has been unobtainable, as it continues to indicate absolute resistance in gold. And immediately following gold hitting 1,370 per ounce, we had a series of lower highs until the market actually broke and then traded below the shorter term 50-day moving average. And that was the beginning of a major correction in gold, and also the first occurrence of a death cross or dead cross here. And that occurred, of course, just after the presidential election in November of 2016. And immediately following the occurrence of this dead cross, we saw gold decline another $100 from approximately $1,220 down to $1,120. That was the first occurrence. The second occurrence of a dead cross happened yesterday, along with the fact that we have now broke and are trading below the 78% retracement, leads me to believe that we will see a further decline in gold pricing. For that reason, aggressive traders can enter short positions either in the August contract, which is the most current, or the October contract, which is currently at $1,266.30. Stops should be placed above the 78% retracement, which is at $12.67. Traders, as we focused upon during the entire show, we have a unique scenario that has not occurred really since just before the presidential election in 2016. That is when we had a major sell-off resulting in a dead cross, and we now have that happening twice. This is the second occurrence. That, coupled with the fact that we had gold open and close below the 78% retracement, is definitely an indication of potentially lower pricing, and the reason we issued our sell signal for aggressive traders. We'll discuss that more in detail, along with our targets and exit strategies throughout the end of the week. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.